Hi everyone, welcome to today's webinar. So for today's session, we're going to be talking about divergence trading. In the meantime, we're going to give a couple more minutes to let more people join the session before we get started. So give about maybe 2 to 3 more minutes. So in the meantime, let me know in the chat if you can hear me and see me clearly as well. And you can see the slides. Yeah. And feel free to get yourselves a drink, make yourselves comfortable, and I will see you guys in about 2 more minutes. If at the end of the webinar we have time, we probably will have time after we're done with the slides. So let me know in the chat as well if there are any setups you'd like to see. We'll definitely have time to go through a couple of them after we're done with the slides. And then we can take a look at some live analysis of implementing divergence trading as well. So feel free to let me know in the chat if there are any specific currencies or commodities or indexes that you'd like to see. Okay, let's go ahead and get right into it. So first things first, as per usual, a disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all of your capital. These products may or may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. The material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Okay, I am Melanie and I will be your speaker for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019, 2020, and 2021. Okay, so here's our agenda for today. Firstly, we'll go through what exactly is divergence in trading, and then what indicators you can use, and then we'll go through a couple of these indicators, so stochastic, RSI, MACD, divergences, so on and so forth. And then we'll go through the different types of divergences, such as normal, hidden, and exaggerated, and then we'll combine them together for high probability setups. So if you see me looking towards the side for a lot of the webinars, because I have another screen here. But let me know in the chat as well throughout the webinar if you have any questions. I'll also be keeping an eye out on the chat. Okay, let's go ahead and get started. So divergence in trading is a technical analysis concept that compares that compares the movement of a security's price and an indicator, such as an oscillator, to identify potential trend changes. Can you guys hear me? Testing. Okay, because it doesn't show that my audio is being recorded. Okay, but no worries, let's go ahead and continue. Sorry about that. Okay, so there are two main types of divergences. We have bullish as well as bearish divergence. And I've included a chart here for you guys to see the different types of divergences. But basically a bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. So this suggests that the downward momentum of the security is losing strength and the potential upward trend may emerge. So on the other hand, we have bearish divergence. So that occurs when the security's price makes a higher high, while the indicator makes a lower high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So it's important to note that divergence is a potential early warning sign of a trend change, but not a guarantee. So traders will often use other technical analysis tools to support the divergence signals. So these can include trend lines, chart patterns, so on and so forth to confirm the divergence signal and make trading decisions. So we'll take a look at a couple of examples. Firstly, in this example, we have price making a higher high, slightly higher high on our price chart. And then on our RSI, in this example, we are using RSI, it's making a lower high. So you can see price is showing us a descending trend line, whereas on our price chart, it's giving us a increasing trend line. So first point, price is testing a key horizontal resistance level with price making a small high, resulting in bearish divergence with RSI. Since on point number 2, our descending resistance line on RSI caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here. So this is exactly what happened after that. Immediately after we've identified the bearish divergence, we can see how price reverses strongly off of the horizontal resistance, RSI resistance, and the bearish divergence. You can see this is what happened on the RSI as well. In our second example, once again, we have a bearish divergence, but in this case, it's quite small. So bearish divergences can be significant, like the one we saw earlier, where it's a whole resistance level, whereas but there are also cases where bearish divergences can occur as just a small increase or a smaller high or a smaller low on the stochastic or RSI charts. So in this case, we're using a stochastic oscillator and it's made a lower high in this case, whereas on price, it's made a higher high. So you can see after that, after we identified that, price continued moving together and then we saw this repeated pattern here where price is making a lower high. Once again, price makes a higher high on our price chart, whereas stochastic makes a lower high. This is also what we call a hidden resistance level, since there are two swing highs that line up nicely at this 94.98 level. Okay, so once you've identified that, then you can expect price to reverse off, since given our RSI, it is the same resistance level, But on our price chart, on our price chart, you can see how price has increased. Is this telling us that price is likely to continue to drop after this point? And you see that's exactly what happened immediately after this section here. Okay, next we're going to take a look at divergence potential. In this case, we're using an RSI instead. So if we take a look at the price chart, first point is that we always want to take note of where the bearish divergence starts, as this is the level where it tends to reverse to. So we have price making a higher high on price chart, and on our RSI, it's making a lower high. So this is obviously a bearish divergence, and you can see we highlighted this starting point or the starting area because we're expecting price to reverse off of this area after we identified this bearish divergence. And that's exactly what it did. It reversed off and it retraced back to this level here. So this is combination of what we call a pullback, in this case a pullback support, because we are expecting price to price has broken out of this resistance. It's broken out of this resistance and it's retracing back and it has bounced off of this level. So now becomes an overlap support level. So if you were here for our support and resistance series, this is just a recap for you. But if not, no worries. That's just a brief summary of what is happening here. Okay, so next we have forecasting breakouts. On our price chart, we have an ascending trend line. Remember, for a valid ascending trend line, we need three significant swing lows for it to be considered a valid trend line. So in this case, we have definitely more than 3 points on the line. Same goes for our RSI. You can see at the first point, or rather the first area that we've highlighted, RSI broke the ascending support line or trend line before price did. So this forecast that price might break it. So you can see it continues up. Over here, it continues upwards, whereas on our RSI, it has made a lower high. So right after this point, you can see that's exactly what it did. It's barely breaking out of the ascending support line, but shows strong reset bearish divergence against the RSI. Point number 3, RSI breakout plus bearish divergence as well as the price breaking out gives us a high probability that price is going to reverse immediately after this line. You can see that's exactly what it did. It reversed off and it dropped strongly. Okay, next let's take a look at another example. In this example, we're using an RSI indicator once again. Here we have a descending trend line on our RSI. Over here on our price chart, we don't quite have an ascending trend line, or rather the descending trend line, because as I mentioned earlier, for it to be a valid trend line, we need 3 significant touches, and in this case, we only have 2. So we've highlighted this point here because price is, or rather RSI, is breaking out of this descending trend line or descending resistance. So after this, we're expecting price to shoot up and continue within this ascending trend line. You can see that's exactly what it did here. So price is now testing this trend line and we're wondering if it's going to break out of it. So that's the first point. Second point, we see this descending line breakout or descending trend line breakout of on our RSI chart. And third point, we have a bullish divergence. So remember, for bullish divergence, price is making a lower low, and RSI, or whichever indicator you choose to use, so it can be RSI, MACD, stochastic, whatever oscillator you choose, that indicator will show a higher low. So that is a bullish divergence. And over here we have that. And combining all of these 3 points, it suggests that we could be seeing a very strong reversal on our price chart. Okay, so you can see that's exactly what happened. It reversed off of the swing low and breaks out of our ascending trend line, or rather descending trend line. Hey, let me know if there are any questions so far. Okay, next we'll take a look at some GIFs. So if we're just taking a look at the image that I have here, we have price moving in a decreasing or rather a descending trend channel over here. So price is moving within this descending trend channel and it's making a lower low. And this is on our price chart. Whereas over here, okay, it doesn't show, but I'm using a stochastic indicator here. So on this stochastic indicator, price has made a higher low. So this gives us a bullish divergence. Okay, let me just check the question. Can we take a long position here? Yeah. So I'm just getting to that. So between these 2 points, price has made a lower low on our price chart and it's made a higher low on our RSI. So that in combination with this resistance at the swing high here, that lines up nicely with a 100% Fibonacci projection. So all of that gives us this, or rather it suggests that price is going to break out of our descending trend channel. You can see that's exactly what happened here. So after it breaks out, then we'll go in for a long position, or we're going for a buy from here right up to this level here. And the reason why we stop at this level, or rather we put our take profit at this level, is because of the confluence area. So we have a swing high resistance here, and actually I can pull it back a little bit further to maybe this swing low. And the reason for that is to make it an overlap resistance. Once again, if you were at our support and resistance webinar, you'd know that overlap resistance levels or overlap support levels are where the bulls and the bears are respecting that level, which makes it very significant. So that in combination with this 100% Fibonacci projection level make it a really significant confluence area. And you can see how many times price ended up testing that level. So firstly, 2 points here, price breaks out, price reverses, it shoots right up, breaks out of the descending trend channel, and reaches our take profit at this resistance level here. But it's not likely to break out of it because of the confluence area. Okay, I hope that was clear. We can just stop here for a while so you can watch the GIF a couple of times. Which time frame should you use for high probability? Divergence trading is normally for pretty short term trades, so it's not really recommended for long-term trading. So you could use it for minutes or I think maximum maybe the 4 hour chart. I wouldn't go more than 4 hours. Okay, okay. Let's take a look at another bullish divergence example, and then we'll take a look at a couple of charts and see if we can find any divergences there. So in this bullish divergence example, we have price making a lower low. Okay, price has made a lower low, whereas on our stochastic, price has made a higher low. So it's quite a minimal difference. So you might not be able to spot it. So it takes a bit of practice, but if you use these vertical lines, it really helps you to section off the areas and take a look at the differences. So in this case, we don't have any Fibonacci levels that line up with each other. We're just purely looking at the higher lows and the lower lows. But because price has made a lower low, RSI, or stochastic in this case, is giving us a higher low, then we can expect price to shoot up immediately after this second vertical line. You can see on our GIF, that's exactly what happened. You can see how it immediately shoots up after that. So you can use this kind of as a forecast or prediction of whether prices are going to drop or go up. Okay, now let's take a look at some charts because that's the end of our slides. So let me know in the chat if there are any setups you'd like me to go through, and then we will take a look at some divergences as well in those setups. Okay, maybe to kick things off, we can go ahead and take a look at DXY first. While you guys are letting me know in the chat what you'd like to see. Okay, so first things first, we're going to start off by looking at the higher time frames, just so we have an idea of where prices are headed towards. So now DXY, prices are moving downwards, pretty bearish over here. On our daily time frame, pretty bearish as well, although it does look like there is a reversal here. Let's see if we have a descending trend line. Okay, it looks like price has recently broken out of this descending trend line. So it's giving us a bullish signal here. Okay. Now on our daily time frame, it's also bullish here. Okay. So we have a ascending trend line here. Once again, I'll remind you guys that for a valid trend line, we need 3 touches at least. Okay, now that we have the general direction or trend line, then we can go in with our support and resistance levels. So here's going to be my first support level. And my first resistance level just here. And here is my second support. Okay, Now that we have that, then we'll go in with our Fibonacci levels now. So I'm going to start off by looking at a retracement. So for retracement, we use 5 levels: 23.6, 30.2, 50, 61.8, and 78.6. And I can see that my 23.6 lines up nicely with my second support. Okay, so I'm just going to keep that. Okay, and then I'm looking for another retracement. So my 38.2 lines up with my first support. And my 50% as well lines up with my second support. So these tend to be areas more than levels. So it's fine if it doesn't exactly line up with the level itself. Okay, and the reason why we're doing this is to look for confluence areas, as I mentioned earlier. Okay. Now I'm going to go in by looking for projection levels. So for projection, we use these 3 levels. Okay. I can see my 61.8 and 100% line up nicely. Okay, just gonna highlight this level because it's quite okay, because we have so many Fibonacci levels lining up at this second support here. Okay, I think that's all the levels that we have. Now let's go in with our indicators. So we like to start off by looking at Ichimoku as well as MACD, because for these two indicators at one glance, it tells you exactly what the signals are. Price is moving above the Ichimoku cloud, giving us a bullish signal. Whereas on our MACD, it's kind of giving us a bit of a bearish signal there. Okay, so let's take a look at RSI and see if we can find any signals here. Okay, so as I mentioned earlier, we have a hidden resistance here. So when you're looking at RSI, we can look for a couple of things. Firstly would be for an ascending trend line. Obviously here we don't have a valid ascending trend line since we only have 2 points. Okay, so that's the first thing you can look out for. Next thing would be to look out for divergences. In this case, I was looking between here to here, but you can see price made a higher low and price made a higher low and our RSI also made a higher low. So this is not a divergence. Next, you can look for hidden resistances or supports. In this case, I found a hidden resistance here. Okay, and you can see over here, price actually made Sorry about that. Price actually made a higher high. So this also is considered a divergence. I don't know why that keeps happening. Okay. I'll try to get that sorted out for next webinar, but just bear with me for the time being. So yes, hidden resistance on our RSI. Price made a um higher high over here from here to here. Okay, you want to make sure that you're comparing the tops here. So what does this mean? This could suggest that price is likely to continue to drop since it's reversing off of the first resistance. Okay, and that lines up nicely with our MACD as well, since price is, or rather since MACD is giving us a bearish signal. So we can expect price to continue to drop, since it's already in the process of dropping from here. Okay, this is my intermediate resistance. From here all the way down to our first support. But we're not likely to see a break out of the first support or even out of this ascending trend line because there is still upward pressure from, as we saw earlier in the previous time frame, the daily time frame, price broke out recently out of the descending trend line. So it's giving us a bullish signal. Here we also have an ascending trend line, so also bullish signal, and also our this area here that I didn't highlight earlier, 38.2 as well as the 61.8, plus this overlap for support is also a confluence area. So we're not likely to see it break out of here, but it is going to continue to drop towards our first support. Okay, and once it drops towards our first support, we can likely see it reverse again. Okay. Any questions so far? Okay. If not, let's take a look at our next chart. Maybe we'll go ahead and take a look at dollar franc. Okay, same thing, we're going to look at the higher time frames first. Okay, we see it dropping significantly on our weekly time frame, on our daily time frame as well. Okay, and we also have this descending trend line. Okay, so it does look like price is going to reverse out of this descending trend line, but this is the daily time frame. So let's take a look at the 4-hour time frame. So earlier we had a question on which time frame would be the best for high probability. So for, as I mentioned earlier, for divergences, they're normally for short-term trading purposes, which is why I said either the minutes or hourly. But I will say also that we normally wouldn't recommend anything less than 15 minutes because there tends to be too much noise and it's quite difficult to trade on those timeframes as well. So we try to keep it between the 30-minute range to maybe about the 4-hour range for divergence trading. Yeah. So in this case, you can see I have been observing or rather taking note of the 1 week and daily time frames, but we also trade, or rather we do our analysis on the 1 hour and 4 hour time frames mostly. Okay, here we also have a descending trend line. Next, I'm gonna go in with um, support and resistance levels again. So here's my first resistance and first support here. So for these levels, we just use the closest swing high or swing lows to where price is at and then see how far we can pull it back. Okay, so same thing, I'm gonna go in with our Fibonacci levels. I'm looking for a retracement here. Okay, uh, so I can see my 50% lines up with my first resistance. 38.2 is a little bit far from my second support. So I'm just gonna count this 50%. Yeah. Okay, next, let's take a look at projection levels. Okay, no projection levels there. Okay, I think that's all the levels that we have over here. Oh, I think we have one more retracement here. Okay, we have a 23.6 and 38.2 that line up nicely as well. Okay, now let's go in with our indicators. And by looking over here, we have a pretty bearish um, view because of this resistance level here and also the downward pressure from um, our trend line. Okay, price is moving above the Ichimoku cloud, giving us a bullish signal. MACD isn't telling us much. Let's see. Okay, it's not telling us much. So it's still ranging, okay, on our MACD. Let's take a look at RSI. Okay, so I see a descending trend line here. Okay, so even though we have this descending trend line, on our price chart, of course, we have our first resistance between these 2 points here. Okay, so this is a sign that price is likely to continue to drop. So I'm going to remove our Ichimoku because it doesn't support our analysis. So price is currently testing our first resistance. It's likely to continue to test it and then reverse off of it and head towards our first support. Okay, let me know if there are any questions so far. Okay, I wanna maybe give you guys another example of a divergence over here. Mm, okay, from here to here. We can see that price has made a lower low here, whereas on our RSI, price has made a higher low. So let me know in the chat if you think this is a bullish divergence or a bearish divergence. Okay, so this is a bullish divergence. Okay, so we'll follow whatever the signal is on the indicator that you're using, RSI, stochastic MACD, whatever it is. So if we play, this is in replay mode, but if we play it, you can see exactly once we've identified that there is a bullish divergence, right after that, price has shot up. Okay, and that's what this movement here is what we are looking for when we make use of divergences. Okay. Okay, I think we have time for maybe one more setup. Maybe we'll go ahead and take a look at gold now. Okay, on our weekly time frame first. Okay, price looks like it's moving downwards. Daily time frame as well, pretty bearish here. Okay, and we have price moving within this descending trend channel. So for descending trend channel, just to recap, we want two tops and two bottoms. Okay. Let's take a look at the 4-hour time frame. Oop. Here we have a very obvious descending trend line. Okay, and we also maybe have a trend channel. Okay, so two tops, two bottoms here, and a descending trend line. Now we're going with our support and resistance levels. Here's my first support. Okay, and this level here is my first resistance. And then second resistance. Just over here. Okay, so all of these levels are purely based on support and resistance, pullback, overlap levels, swing high, swing lows. As you can see, we'll then go in with Fibonacci levels to then move the levels around to more appropriate levels if necessary. So you can see my 38.2 lines up nicely with my second resistance, 23.6 as well. Next, our projection. Okay, we have a 100% that lines up with our first support. Okay, now let's take a look at the indicators. Ichimoku, MACD. Price is moving below the Ichimoku cloud, giving us a bearish signal. MACD is slightly bullish. So this is something that you might encounter quite frequently because there are so many indicators. 50% of them will tell you that it's bullish, 50% will tell you that's bearish. So just pick a few that you are comfortable using and that you are confident in using. And then, yeah, just stick to those indicators. Here we have a trend line, descending trend line as well on our RSI. Okay. I'm also seeing a hidden support level here. Whereas you can see here that price has definitely made lower lows. Okay. So this tells us that price is likely to reach a point where it's going to reverse off of a support level. And that support level could definitely be our first support. But also because we have this trend channel, and it doesn't look like it's going to break out of the trend channel anytime soon. So we could see it. I'm just going to remove this trend line. So we could see it bounce off as we do see it now. So it's likely to bounce off and continue going within our descending trend channel. Okay, so ultimately still pretty bearish on the gold, but it's as of now, we're likely to see it reverse off and continue upwards within the descending trend channel. Okay, and that's all thanks to this hidden support level here. Okay, let me know if there are any questions. If not, that's all that I have for you guys today. Thank you guys so much for joining me, and I will see you guys next week. Bye. Thank you. Bye, everyone.